What is a Delaware Statutory Trust? A Delaware Statutory Trust, or DST, is a commonly used structure for accredited investors looking to fractionally invest in real estate. The primary draw to investing in a DST is that it is a 1031 exchange eligible, meaning that investors who are selling a property can defer paying capital gains tax by investing those proceeds into a DST, which the IRS has ruled qualifies as a like-kind investment. DST offerings are normally sponsored or brought to the market and made available to accredited investors by national real estate companies and can be offered through third-party securities, broker-dealers. DST sponsors acquire the properties to be offered within the trust. The DST sponsor will do due diligence on the property, sometimes securing long-term debt that is non-recourse to investors, and arrange all legal paperwork to ensure that the trust qualifies for 1031 exchange purposes. The DST sponsor will then make the assets available to accredited investors on a fractional ownership basis and will collect a fee for structuring, overseeing, and managing the investment on behalf of investors.
This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.